Welcome to RBC's Markets in Motion podcast, recorded January 4th, 2022. I'm Lori Calvasina, Head of U.S. Equity Strategy at RBC Capital Markets. Please listen to the end of this podcast for important disclaimers. Today, we're reviewing the results of our quarterly RBC Analyst Survey, which we took right before the holiday break. It provides a unique bottom-up lens through which to assess the 2022 outlook for the broader U.S. equity market, which complements our own top-down approach. 3 big things you need to know. First, our analysts' outlooks for performance over the next 6 to 12 months remain optimistic, boosted by constructive views on fundamentals, valuations, cash deployment, and margins. Second, across all questions, our analysts tilt positive on energy, financials, materials, and tech, along with utilities and healthcare. Third, key issues in focus for our analysts are demand, COVID, inflation, regulation, labor, supply chains, and pricing. What jumps out to us the most on the hot topics is that our analysts generally see their companies as able to manage through all of the major challenges they've identified, including Omicron. If you'd like to hear more, here's another 5 minutes. While you're waiting, a quick reminder that you can subscribe to this podcast on Apple, Spotify, and other major platforms. Before we jump into the details, there are a couple things you need to know about how we conduct our analyst survey. Once a quarter, we ask all of our U.S. equity analysts to rate the industry they cover on a scale of plus to minus 2 on 6 recurring outlook questions: performance, fundamentals, valuation, policy, cash deployment, and margins. We average their industry scores together to arrive at sector scores, which allows us to compare sector views to one another. We also get our analyst views on hot topics in the market. Now let's jump into the details. Takeaway number 1. Our analysts' outlook for performance over the next 6 to 12 months remains optimistic, boosted by constructive views on fundamentals, valuations, cash deployment, and margins. Our analysts' views on the policy backdrop, by contrast, are cooler and more properly characterized as neutral. For the most part, their aggregated views are slightly more constructive than what we saw back in our September survey on almost all of the recurring questions. On margins, however, it's fair to say that outlooks didn't change all that much. Valuation views improved the most, followed by performance outlooks. Moving on to takeaway number 2. Across all questions, our analysts tilt positive on energy, financials, materials, and tech, along with utilities and healthcare. These biases represent a mix of value cyclical, secular growth, and classic defensive sectors. When we look at industrials, however, views were more mixed by question, and the aggregated performance score for the sector was close to neutral. Enthusiasm levels were also generally lowest for communication services, consumer discretionary, consumer staples, and REITs. When we look at each question individually, positive outliers, or top sectors ranked by their average industry scores, were energy on performance, financials on fundamentals, healthcare on valuation, healthcare and utilities on policy, staples on cash deployment, and financials and industrials on margins. Negative outliers, or bottom sectors ranked by average industry scores, were communication services on performance, communication services and consumer staples on fundamentals, REITs on valuation, energy and industrials on policy, industrials on cash deployment, and consumer staples on margins. Wrapping up with takeaway number 3. In terms of hot topics, when we asked our analysts to name their top upside and downside risks, the issues that came up the most were demand, COVID, inflation, regulation, labor, supply chains, and pricing power. A number of these issues came up on the list of upside risks our analysts identified, as well as the list of downside risks they named. What jumped out to me the most in some of the more specific questions we asked about hot topics was that our analysts generally seemed confident regarding the strength of pricing power and their company's ability to manage through Omicron. More specifically, half of our analysts told us that pricing power is strong or very strong right now. Views on healthcare, industrials, and staples were generally positive across most industries on this question, while materials and consumer discretionary were a bit more mixed. On the topic of Omicron, most of our analysts didn't have a clear view on the outlook for the variant. When we asked our analysts how optimistic or worried they are about Omicron, more than half, 54%, picked neutral, don't know, need more time. Otherwise, the pessimists at 27% outweighed the optimists at 19%. That's a bit different from what we saw in the investor survey we took right around the same time in December, where the buy side tilted much more optimistic on the Omicron outlook. All that being said, the very good news on Omicron is that more than 2/3 of our analysts say their companies are prepared or well prepared and will manage through this next challenge in the COVID pandemic. That's all for now. Thanks for listening, and be sure to check out our sister podcast, RBC's Industries in Motion, for deep dives from RBC's team of equity analysts.
This content is based on information available at the time it was recorded and is for informational purposes only. It is not an offer to buy or sell or a solicitation, and no recommendations are implied. It is outside the scope of this communication to consider whether it is suitable for you and your financial objectives.